Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Thursday morning, gang. Hope everyone's doing well. We have a lot of movement this morning, and if you take a look at the economic calendar, if you take a look at what's going on, say on a Forex Factory or Trading Economics or whatever your favorite calendar happens to be, you will notice that there is quite a bit going on the calendars. And I'll show you the one that I use here. Just bear with me. All right. So I usually toggle between Trading Economics, which is a great calendar, tradingeconomics.com. The other one is Forex Factory. I've been using this one for, gosh, a long time now. And Forex Factory is cool in that you get not just a US-centric version of data that's being released, but you can also see what other data is being released around the world. And when it comes to trading treasuries, currencies, even energies, it's good to know what was happening while we're asleep here in the U.S. Unemployment claims came out at 8:30, and you'll notice that they were 10,000 higher than expected. That's bad data, and we're still in an environment where bad data is, well, good, right? So that just tells the Federal Reserve that they should keep monetary policy and messaging pretty stable. It's not time to get hawkish. And if anything, we think about, hey, let's increase the probability that the rate cuts could come sooner. And those are always things we need to think about when we look at data specifically pertaining to inflation and jobs. And this is, of course, just a weekly job report. Philly Fed Manufacturing Index, not usually a super high hot zone, but nonetheless, misses are going to be perceived as bullish for equities. Something that is an improvement in the economy is still not necessarily, in other words, better employment or lower inflation. They're not necessarily mapping to bullish reaction in indices quite yet in a consistent way. They will, but for now, this is really more about reminding Jerome that he's got to cut and probably cut sooner. So there's three ways you can measure the way that this data lands. One is just take a look at the S&P. That's one way to look at this. The other way is to take a look at bonds. What was the reaction in bonds? Are yields higher or lower? Obviously higher. And the last place to look, and this would be to get a view of the US dollar, is look at the 6E. Look at the euro. And what the euro is 58% of the US dollar index basket. So this is a great way to view the way in which the dollar is moving. So we want to see the 6E move higher for the dollar to move lower. All right. And that is exactly where we are. So as I like to say, we talk our book. And so I'm still holding the swings. I've got 4 swings right now, QQQ and SMH, and these swings are November 17 expiration. We're going to have to get rid of these sometime between today or tomorrow. That's the end of the ride there. It's been a great ride at that. We also yesterday entered Amazon, which is hanging in there. I'm not happy about what I'm seeing. There's a lot of news affecting Amazon in a way that is separate from the overall strength of the NAS and even in consumer discretionary. But this is why we have stop losses. And I'm nowhere near mine on Amazon right now, but certainly not moving in the direction I want, taking a little bit of heat. And then my 4th swing is Google. Google's actually going to be at, if not actually at this point, above the break even. And we're going to be within grasp of that first target. So here's an example of 2 stocks, both in the NAS, both setting up swings of really equal quality. This one's a nice trend off the 34 EMA wave. Amazon was a nice move higher off the daily price movement range. And one just happens to be following through, and the other one's struggling with a little bit of news that it's going to sift through before it resumes its trend. And this is why we always keep stops on our trades, gang. We always want to remember that we play probabilities. We do not play certainties, or as it's often said, it's called fishing, not catching. So we always remember the one thing that we can control is risk. And over the course of, at this point, 1 week, I'll take 3 out of 4 winners on our swings. So that's where we sit right now. before the bell. And as far as the economic calendar beyond the data, we do have a lot of Fed speak. It just seems incessant. This must be the 72nd time this week that FOMC member Barr is speaking. Lots to say, I guess. And then we move on later on to 5 minutes before the bell, FOMC member Williams, Waller, Barr again, because golly, I didn't say everything I had to say 3 hours ago. So we got Barr again, and then that will wrap up the hot zones for today. All right, so let's jump on over to the chart. Let's jump on over, as always, to your questions, and kicking it off with Alex. I remember hearing you say that options expiration is a time to be cautious. Yeah, I don't like expirations as an opportunity. I think a lot of times traders, and it just seems to be a fascination in the modern day market, zero dated options. What do they present? They present very little time to expiration. In and of itself, that's not a strategy to me, right? Third Friday of the month expiration, that itself is not a strategy to me. It's just a day where we can see some unusual volatility. So I look at both those as reasons to be cautious. That's correct. Is that primarily due to the volatility? Yes, that's really it. That's really it. The volatility, it's almost like a magnet where thick open interest strikes, both on the put and call side. If you think about, and I don't want to get deep into this, Alex, because then it's going to start to present like I'm interested in trading this event, which I'm not. But what happens is when you have a large number of options that are going to expire, as you well know, you're going to have a big group of winners, you have a big group of losers. And whenever there's a broad group that's going to either win or lose, there's going to be a lot more volatility around that event. And that's the way I kind of distill that event down to something where I'd say, you know what? Is there something else I can do on a Friday other than persist in an environment where we're going to see unusual action because of something ending, something expiring? And that could be said about rollover and futures. That could be said for obviously options expiration, but that could be said for any number of high impact hot zones as well. All right. Next up is, bear with me. What are my thoughts on CRWD? Well, let's see. I don't have any skin in the game on this, Monair, and I frankly probably won't. But my thoughts are pretty simple. It's oversold on the 60-minute time frame, meaning it's setting up potentially for a buy, but I don't have a trigger at the moment. And it's an overall uptrend on the daily, which means gap close, mean reversion. Those could be opportunities for buys. So I would stick to the long side with CRWD. All right, JRS, I'm wondering what I might think about a swing short on FSLR 1 to 3 days. Thank you for the specificity, JR. I appreciate that. So 1 to 3 days would typically land me in a 60-minute time frame. I like the uptrend. Let's get a pullback, mean reversion. That, really anywhere between about 148.10 to 144.5 looks really good. That's a wide zone, I know. This is true. And what we want to do is wait for that pullback. And in that, we can look for long calls, 1 to 3 days. Look, it's Thursday. The problem is, JR, we're going to run into options expiration. So before you go buy the FSLR, what I like to do is I like to look at the option chain for this options expiring tomorrow, the 17th. And I want to find where the open interest is the thickest, ideally on both sides of the strike. And I want to make sure that I'm not putting myself in a position to have to deal with, just the battlefield that typically is that strike or in that area of the strike. All right, next up is PP Family asks, do I screen for tradable options every day? I don't know what that means. Do I screen for tradable options every day? I screen for options every day, of course. Meaning, do I screen top 20, 30 market movers, volatile stocks for the day? No, I'm not looking at the top 20, 30, not at all. How do I screen? I look for relative outperformers, PP Family. Oh, so do I use a scanner type approach? So, no. I'm not looking for volatile stocks. I'm not looking for top market. Nope, not at all. I'm looking absolutely for relative performance. So no, I don't use a screener PP family. If that's kind of the distillation. So thank you for the question. I do not, but I do screen for option opportunities. Absolutely. As a day trader or as a swing trader every single day. You bet. IWM short. Do I want to be short the Russell? I do not. I do not. There's a number of reasons I don't want to be short the Russell, but let's start with the RTY. All right. So these are really basic things that I think should be a staple for most trading approaches. Timing matters, right? Standard. Timing matters. So if you were to ask me, looking at the RTY, which maps then to the IWM and frankly even the KRE, there was a short. There was a short, but the timing is very specific. Most traders, by the way, are going to do something that sadly is very common and leads to poor fills, and poor fills make for just a difficult trade, right? So take a peek here. While the price action travels higher into the yellow zone, right in here. Okay, now remember, RTY is IWM. I'll always start my IWM analysis with the RTY. All right, so when I'm in this area, this yellow area, that's where I want to be either shorting RTY, so that would be the December contract, or I want to be in long puts on IWM. So that's the zone for IWM. The question is whether or not this is happening at a time that we can do anything with the IWM, because remember, it's got to happen between 9:30 and 4. And yeah, absolutely. In fact, during the 10 to 11, then 11 to 12 candle, traded right up into that zone, which makes the IWM a short, but specific to that level. What most traders do, sadly, is that they will start to wait for price to move lower, and they end up chasing the move lower and, quite frankly, overpaying for puts. Realize that in the bullish momentum of rallying in to the daily price movement range zone, and by the way, gang, for those of you that have been thinking, Rog, I want to use these DPMRs, right? 3 out of 4 of our swing trades right now, 2 of our big winners are DPMR based, daily price movement range based entries. If you're looking for a time to try those out, do it now. I believe they're on sale, and take advantage of the Black Friday if you want to check out those daily price movement ranges, right? So see, we traded up into that area. Don't chase it lower, right? Don't chase it lower. And that would be the best setup. That would be the best setup for the RTY in terms of the short, right? And that happened yesterday. Now, anything lower than that becomes really susceptible to the chop we're seeing at the moment. Now, I don't like this. Now, I said all that, but I don't like the short on RTY. And I'm going to tell you why I don't like the short, because my traders might say, Rog, we're not trading that, for very good reason. The RTY has crossed over, basically going positive for the year. I don't want to short RTY. There's a lot better setups we could take advantage of. Number one, I'd rather be a long player in the RTY. Notice that same DPMR at work here. And above this pink line is where we are in the year. Above that, it is hard to be a bear, gang. It's going to be very difficult to get sustained movement to the downside. Of course, it could happen. This is the weakest of the 4 indices, but I would not want to be largely very bearish above that line. So the rest of it is, in terms of a 5-minute, I won't know yet, right? I won't know yet. 5-minute at 9:14, a little too early to make a call on that. But if we can maintain a neutral environment, if we can get back above the previous session close and a number of things, maybe yes. But right now, I'd have to say near term, I'm in the camp of the bears. I just don't know how much follow through we're going to see, but I would be at least near term in the camp of the bears. Overall, though, I'd prefer to be in long position. So sinking lower would be the opportunity. All right, next up, how much time do I buy on calls? Zane, it depends on liquidity, but I'm usually not going to be any less on a swing than about 7 to 14 days on those. All right. Next up is what are my thoughts on zero dated options? PP family, I'll be honest. I think the obsession with zero dated options is bordering on mania. It's ridiculous. I'm not a fan. It's simply an expiration. That's all that it is, right, gang? At the end of the day, however I would have traded a Friday expiring option versus a zero dated option, the setup is not different because there's more time to expiration or less. So I try not to think about it at all. The mania around zero dated options is borderline lunacy at this point. When I'm day trading, though, I love them, right? Not because it's zero dated, but because I'm not having to pay for time that I don't need, right? Gang, it's just a time effect. That's it. It's still a long call, long put, but because they're liquid and because there's more frequent expiration, I think for options day traders, SPY, QQQ, and I'm sure there's going to be more zero dated options that come. I think it makes it a great tool for day traders because, again, we don't have to pay for time we don't need. All right, what are my thoughts on snow? All right, so starting with the structure, thoughts on snow are, let's see, put credit spread. Again, not knowing where, when, timing, target. Ryan, I frankly, my friend, have very few thoughts on snow. It is on a 5-minute downtrend for whatever that's worth. It is arguably oversold on the 1 hour, but the 1 hour and 5 minute have nothing to do, right, with your expiration, which is, a month from now. So most of your analysis, I imagine, would be built on the daily or maybe a slightly longer term intraday. I really don't have any at the moment. I think that the fact that we're chopping around would make this more a situation as to, do I personally, meaning just me, Ryan, not you. I don't know what tool you're using or what the setup is, but for me personally, I will not prioritize sideways markets when I do have trends that are available to me on either other time frames or other symbols. So this just wouldn't be something that'll end up on my radar in terms of something that I would want to trade because I don't have an edge in terms of the underlying trend. All right. Do I filter RSI out? No, I don't use RSI, Zane. I do not. Question again on scanning. I do not use a scanner. I don't use a scan tool or a screen tool. Do I use implied volatility? I do not. Again, so that question's a big question, PP family. That's sort of the bigger question of how do I trade, right? And I don't use implied volatility. I think it's basically a flawed concept of looking back at 52 weeks of behavior using the most volatile window of time as a measuring stick. So I'm not a big fan usually of implied volatility. All right. I do like to use, so for those you wonder, well, okay, Rog, if you don't like implied volatility, how do you measure volatility? Hourly price movement ranges and daily price movement ranges. And that's the way I'm always going to say it. By the way, you've seen them at work on my charts. And the reason I like to use that hourly and daily price movement ranges is it presumes a few very important things that implied volatility cannot and does not, and frankly, average true range does not and cannot. That Monday, the nature of a Monday is very different than nature of Tuesday and nature of Wednesday. Each day of the week carries with it a certain characteristic. We know this. We've just never thought generally to measure it in that way. That's what happens in the daily price movement range. What about each hour of the day? I think everyone here says, yeah, Rog, 8 to 9 is different than 9 to 10, and 9 to 10 is different than 10 to 11, and 11 to 12 is different than 12 to 1. Why wouldn't I then take the characteristics of each day or each hour and look at a historical volatility through that lens? And that's exactly what hourly price movement ranges and daily price movement ranges do. Now, I can say that all day long, and granted, I'm biased. I created the things, right? That is a Raghee creation of getting curious about how come no one's ever thought to look at data curated in that way, right? And I encourage people to get curious because it's not as if all the indicators are out there, can't be tweaked or improved or even completely changed, right? I'm looking at volatility from a completely different way. So what I would say is the best thing to do is just put it to work, right? And that's where the sale is so great. You got 30% off, something like that. So I like price movement ranges, PMRs, over pretty much every other kind of volatility measurement. And are my tools available on TradingView? Mark, they sure are. Absolutely. My two preferred platforms are TradingView, which is powered by TradeStation for me, and of course the Thinkorswim platform, which is up right now. All right. So that is it. That is it. As always, gang, thank you so much for being here for Charts and Coffee. I appreciate the time. I appreciate the questions. I will see you all tomorrow, same time, same station. Be good to each other, gang.